My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. If you want to make friends, I'm just trying to save you some money. My job is not just to entertain, but to teach and educate. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. What do we do after today's absolutely brutal meltdown? Dow went from up 462 to down 313. S&P ultimately losing 1.1%. Sell. And the NASDAQ dropping 1.3%.
The house of pain.
Just in the last hour of trading was so horrible. You know, the VIX index, that fear index, it jumped from 23 to nearly 26. We were gripped by something, anything. We don't even know. Something working in Ukraine, China, Washington, Wall Street, or Hollywood even. But when you think about Netflix's miserable forecast that sent the N in FANG down almost 20% after the bell. But you know what? We got to step back for a second because you know how often these sell-offs lead to the opposite happening? Let's talk about 2 weeks ago. 2 weeks ago, I talked about a checklist I used to identify when the market was bottoming. See, at the time, the market had been going down. I didn't see a bottom because I was being dispassionate about things I look for. I said there could be more pain to come. We didn't have enough checks. The market was still too high to me. It was too perilous. Didn't want to put any money to work from a charitable trust. Still taking money out. Now, though, especially after the total despair of the last hour today, I'm actually feeling a little more confident. This is what a bottom could look like. It's murky down there. Let me walk you through the same dispassionate checklist from 2 weeks ago, because I know it's difficult to look through the negativity and see something, anything constructive, but we must do that together. And that brings me to item 1 of my checklist. Before the market can bottom, we need to see a sickening level of negativity. Looking at the tape should make you want to, yes, puke. And this market certainly felt vomit-inducing as we went into the close. Believe me, the run to the exits was visceral. It was excruciating. Even before then, the American Association of Individual Investors weekly survey had some incredibly weak numbers. Bulls had fallen from 25 to 21%. That's shattering. Bears had risen from 38 to just under 47. This is an astounding level of negativity. One of the few times we've ever seen it. So you know what? We're checking that box. Okay. Now, emphatically, even as that scary decline in the stock of Netflix was at the end after tonight, there'll be more fright tomorrow. Believe me, that carries over. Second, are we oversold? Now, you know I watch that proprietary S&P oscillator like a hawk, right? That's what I use to measure it. I need something, again, dispassionate. Keep thinking that word. Now, I did an oscillator explainer this morning for the Investing Club in my new morning meeting 10:20 a.m. video, which people are telling me is important as what I'm doing in any other point in my life. So I need you to go to this 10:20 video only for club members. I talked about how the market was barely oversold 2 weeks ago, and so therefore it was too early. This time, though, the oscillator has plummeted. Now, it's fallen from +7, where everybody's too bullish. It's an extraordinary positive number. You have to do selling. All the way to -4. But it is not yet deep enough to prevent another down day. It's getting there. -5 is the level where you need to see, where you have to hold your nose and buy. I'd say we're here, okay? Getting there. We have to go to -5. And right now, tonight, we're -4. Third, have the analysts thrown in the towel? 2 weeks ago, we had almost no towel losses. If anything, they dug in their heels. Today, though, they threw in towels all over the place. If you walk by Wall Street, you're probably hit by one. Case in point, AMD. This semiconductor stock, like almost all the semis, has been beaten to a pulp, falling from the 160 to 121 today. An analyst downgraded it. Hey, I get it. Says business could slow. Sure. Wait a second, though. I mean, now we throw the towel? I don't know. Stock lost another $5, like I said it would do, 5%. I said it would do that in Squawk on the Street. I said, look, it's vulnerable. But at what point? Is it down 60 points from its high? Tempting? Okay. Then there's Ford. Like AMD, we saw some Ford, sold some Ford for the investment club at much higher levels. Hey, we're not idiots. This morning, an analyst raises his earnings estimate for Ford. So far, so good, right? But then downgrades the stock from buy to hold, even as it had fallen from 25 to 22. Because he thinks it's too early to start saying good things. I think you're going to get a good opportunity in the teens. Yesterday, an analyst downgraded Cisco, saying that its business is cool despite the increase in orders. That's a measure of the future. These are all signs of a bottom. towel throws. Today, CNBC.com broke this terrific story about how Peloton's halting production of treadmills and bikes, demand and waning. Despite the inexorable decline in the stock, there's still plenty of buys on the street. That means we're going to get more towels thrown tomorrow. Have the analysts thrown the towel? We're going to do this, okay? Some have, some haven't. 4, are the big guns getting clobbered? Holy cow. David Faber, my partner, squawking the street. He reported that while Cathie Wood remains the poster child of poor performance, there are now plenty of big-time hedge funds that got caught the wrong way. Big funds, billions of dollars, bunch of down double-digit guys. That's shocking to me. We're just beginning of the year. We're no longer just watching Wood's ARK funds. Her misery has a lot of company. Are the big guns getting clobbered? Yes. 5, is there actual systemic risk? This one's more of a safety question because systemic risk means you can't trust the bottom, like the late 2008 period. What we have are normal risks. Rising long-term interest rates that have come up rapidly in the last couple of weeks. The backdrop has certainly gotten worse without threatening the entire economy, which is what we need to see before the pain can stop. So I'm going to tell you, events that trigger, no, we're good on that one. All right, we're good. So we're 3, we're now 3 out of 5. Okay, 6, are the public markets closed off to the New Deal? We've seen a couple of IPOs get pulled. That's very good news. I think a more important way to measure this is to look at the CNBC post-SPAC index. The post-SPAC index. Oh, my God, it's doing so badly. I mean, look at this. I mean, and also I like to look at the recent IPOs. They're bad, too. This index is down more than 20% year to date and down an unbelievable 57% over the last 12 months. These outfits that came public by merging with special purpose acquisition companies have seen their stocks get slaughtered. They're still being shellacked despite the uptick in earnings. I think these awful percentages will shut the door to all but the most brain dead of investors because it looked like you're tossing your money into a bonfire. If we get fewer IPOs and fewer SPAC deals, that means there'll be less new supply coming in. And at the end of the day, all markets are about supply and demand, including the stock market. So, you know what? When I look at something like this and how the deals seem to be walking away, I am tempted to check the box which says that we are running out of the public markets being open to junk, that you'd rather put money in a bonfire. 7, can good earnings save us? When I did this checklist 2 weeks ago, the answer was no. Good ones did nothing. Now we're starting to see the likes of United Health, Procter & Gamble, Morgan Stanley, Wells Fargo have real breakouts on good numbers. They will be our new leaders when the selling ends. But then the forecasts for Netflix and coatings maker PPG were disappointing. So here we go again. Too early, okay? 1 and 2, but not in that last hour. How about 8? Is Sideline money ready to come in? Can't tell this one. I'm seeing money still streaming out. Despite the gigantic increase in bond yields, at least on a percentage basis, you still aren't getting much of a return from treasuries. While rates are a lot higher than where they've been, they're still very low on a historical basis. So I think money will come back, flow into the stock market if we stabilize for the last couple of days. But the last hour today is going to frighten people. No box check whatsoever. As a matter of fact, this one went the wrong way. Okay, now. 9, could anything change the principal negative, which is the case, is the Fed getting ready to put the brakes on the economy and tamp down inflation? Tough call. We've had some negative sentiment numbers, a weaker jobless claims figure this very morning, a not-so-hot housing sales number. Against that, though, many of the commodities, especially oil, have moved up substantially. The one big positive, what happens if Jay Powell, by just talking about positive rate hikes, has managed to push long-term rates high enough to slow a bunch of businesses? Right? Just make them go slower. Stranger things have happened. Could anything change the principal negative? We're going to give that one a yes. Finally, is the government outside of the Fed at a hindrance or a help? From Wall Street's perspective, there are few things better than a gridlock Congress that can't accomplish anything, which is exactly what we're getting. You got a box check there. Here's the bottom line. Was today significant? Considering that we've now got many boxes checked, well, it means that something that we didn't have 2 weeks ago, we now have. But that vicious late-day decline, that inspired a lot of terror. So therefore, the market, while being close to the decline, still has some work to do. Michael in Florida. Michael.
Hey, Jim. Big booty out of you from Western Florida. Thanks for taking my call.
Thank you.
Caller. My question is in regards to Norwegian Cruise Line. In your past interviews with the president of Norwegian Cruise Line, Frank Del Rio, he spoke with you about his positive outlook for Norwegian Cruise Line by the end of 2022 with their record bookings. But now with the Fed raising rates, the inflation rate at all-time high, and just recently some cruises are now being canceled due to COVID and Omicron, my question is this. Based on today's close at 2103, would you consider Norwegian Cruise Line a buy right here, or would you recommend sitting on the sidelines to see if it retakes?
I think for people who can tolerate a level of risk, absolutely, Michael. It's just that when they froze it, when you read that Omicron has pretty much overwhelmed the industry again, I think you can get Norwegian Cruise a little bit lower. I really do. All right, now, we are starting to get evidence of the bottom. I think we're very close to it. We just have a few more boxes to check, and we will be there. And it might happen tomorrow. I'll be talking about, of course, 9, and then in my 10:20 morning meeting for subscribers only of the Investing Club on Mad Tonight. The supply chain crisis continues to wreak havoc across a host of industries. And as the kinks get worked out, could now be the time to make money off of it? I'm going to turn to a REIT that's doing it, getting a real read on the space, the CEO of Prologis. Then earnings season is off to the races. I'm taking a closer look at the first report, the financials, giving you my take. And after selling off today on a good quarter, could today's post-earnings reaction from First Horizon prove that the stock just came in too hot, like a lot of others did? I've got the exclusive with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.